G'day folks, welcome back to another update for the world stock markets. We're looking at indices, commodities, crypto and currencies. And we're going to be including some back testing for natural gas and the US dollar and for Bitcoin. In terms of the outlook as of today, July 21st, the S&P and the Nasdaq, both US equities are trading flat, reflecting investor caution ahead of central bank signals. The Nasdaq remains slightly weaker, mirroring industry-specific headwinds but holding overall gains. The German DAX and the Nikkei and the ASX, European and Asian markets are modestly offset. Germany and Japan show subdued momentum and amid growth concerns, while Australia's ASX 200 is bolstered by commodities and financials. Chinese market, the equities trade sideways with sentiment tempered by regulatory uncertainty and mixed signals on economic reopening. Bitcoin at around 118,000 is steady, supported by institutional demand, but range-bound amid uncertainty over US crypto policy. Natural gas, US Henry Hub near 355 to 360. Summer heat demand is supportive, but elevated inventory caps upside. Expect prices mid-threes into the year end. US crude oil, weight traded index around 67 to 68 per barrel. Stable thanks to summer demand and OPEC discipline, though inventories and sanctions make upside limited. Forecast around 66 to 70 short term. US dollar, US Japanese and Euro US. The US dollar is near 96.97, drifting lower. US Japanese flat as Bank of Japan uncertainties linger. Euro US range bound, sensitive to Fed ECB divergence. Gold and silver, gold stable in the $2.90 to $3 range per ounce, underpinned by central bank buying and geopolitical jitters. Silver shows stronger momentum and may outperform gold in the near term. The outlook, a cautious global outlook, dominates. Markets await central bank clarity, macroeconomic data, and commodity inventory updates. Metals and energy remain supported by cap fundamentals. Foreign exchange and equity flows reflect policy divergence and shifting growth sentiment. So let's start off with the world stock markets. So we're looking at the Nasdaq first off. These are all the daily charts. So you can see here it's hit this resistance up here at 23,160. It's risen slightly since our last update, but it's hitting this key resistance. But also notice we've got this bearish divergence long term. In fact, we've also got another smaller bearish divergence in that little area there. So that's a weakening signal. So you've got lower highs on the CCI versus higher highs on the price, in which case we might see a bit of a drop down towards these moving averages. Now at the moment, the CCI1500 here is actually on a bit of a sideways trajectory. So that's showing that divergence, whereas the price is still rising. So we're going to keep an eye on that. And if it drops below this, then we're going to see potentially a target hit, and depends on where you draw the Fibonacci. In the short term, the Fibonacci level, minimum level, will come back towards this moving average range. But if you extend that further, you can see there, depends where you draw it, and I like to take it back to significant lows. The 23.38% is our minimum retrace level. But again, we take it one step at a time, and at this stage, we take it back to the recent low before that divergence started. So if it started back this period, our minimum range is in that range where that moving average range is. Now, I'm not going to draw the target range yet because I'd like to see this come back, and then we'll start measuring where it's going to go. Notice also we've got these fair value gaps here on the Nasdaq. These haven't been filled. These are unfilled orders. These ones here have. This one back here has, and this one here is a fresh one, and that's still to be filled as well. So I might see a bit of a short-term break to the downside, and as I said, if it breaks below this moving average, we're going to see these areas penetrated very likely. So that's the Nasdaq. So the S&P is also hitting this resistance up here at 63.01. Now what I want you to notice for the rest of the indices for the world markets, I want you to notice it's hitting resistance levels. So that's a critical area. They're still slightly rising, but we're seeing a divergence in a lot of these examples. Here's another bearish divergence for the S&P versus slightly higher highs on the price. Again, we might see a breakdown towards that moving average range. You'll notice there we've got another fair value gap which hasn't been hit yet, and these ones down here, I'll mark all those which haven't been penetrated. They're all unfilled orders, and if it breaks through that, then that'll be our next range to look out for. And if it breaks through that, we've got another fair value gap down here as well. So the S&P is looking a bit of a hitting resistance. The price is still rising, but again, watch these bearish divergence. That's the main thing we look at. Next, we look at, on our list of indices, we look at the Chinese market. So the Chinese market as well it's hit this resistance up here at 14,100, and again we've got another almost double top on the CCI1500 versus higher highs in the price. I've already drawn a target for that. I've taken it back to that level there, and that's drawn by a Fibonacci retrace from that high to that low. Yep, that's at 23.38% minimum retrace. Hasn't hit it yet. It's been going pretty much sideways, but again, notice the CCI is dropping very slightly, so that's a slight bearish move on the CCI, even though the price is consolidating. And if we zoom in a bit as well, you'll notice we had a fair value gap here. That's what's all been filled by these candles. We've got another one currently in play, and that's currently looks like it's being filled as we speak for the next few hours or days. Back here, there's nothing there to identify as a fair value gap. So at the moment, it looks like we're going to be focusing on this bearish divergence for the Chinese market. Next, we look at Germany. And for Germany, again, we've got another resistance up here at 24,640. We've also got another bearish divergence, lower highs on the CCI versus higher highs on the price. And again, that hasn't really started to pull back yet. I've identified these fair value gaps. If it breaks through that, the next level will be this one here. And if it breaks through that, then the next level will be down here somewhere. So cautionary moves so far on the German DAX. Next, we look at the Aussie market, the ASX 200. So the ASX, again, hitting this resistance at 87.87. It's pulled back so far. You can see they're closer. It's already penetrated that fair value gap there on that candle. It's broken right through that and currently in this second fair value gap down there. We've got another fair value gap down here, a lot further down, but also I've drawn this. Now here we've got a divergence target, and that was drawn by measuring, let's just double check that, measuring from that high down to that low. And that was drawn some time ago, it seems. So that should be down to that level. Because what we do is we draw the low, we take it back to the low before that divergence started, and that divergence started at that point there. We've got another lower highs on the CCI there versus higher highs on the price. So we take it back to that level. That's a 23.38% Fibonacci range we'll be anticipating if the price starts breaking below that moving average range. Like I said, if it breaks below this range here, then the next levels we'll be looking at this fair value gap down here. And notice all the markets so far are showing a lot lower targets according to these fair value gaps identified. Next, we go to the Japanese market. So the Nikkei. So the Nikkei is showing a 48.60 resistance hit, and it's bouncing off that. There's no divergence. That CCI is moving in line with that price, so there's no divergence. See, those highs are lower, so are those highs. Even those highs are moving in sync with that. So no divergence to consider there. However, we do have these fair value gaps identified, these 3 points. And again, notice this area down here. So we're looking at a bit of a drop if these prices do drop. And in the Japanese Nikkei's case, we're looking at about a 15% decline if it hits these areas. So just be aware of that. If the market starts taking a dive, we don't know where it's going to stop, but these are just potential areas of a potential target or a price retrace. Okay, so next we'll go to some commodities. So we'll look at spot gold. Now spot gold's still making a sideways move here. It's hit this resistance up here at 3,500. Notice the CCI is dropping off even though the price is consolidating, so that's not a strong signal of any sort. So I'd wait for this to be more conclusive in terms of which way it's going to move. I'd like to see the CCI moving consistently to the upside, as well as the price above the moving averages to be bullish, but especially breaking above that resistance at 3,500. At the moment, it's more on the bearish side than on the bullish side. Also notice we've got this fair value gap down here and another area down here. So again, that's also showing a bit of a weakness if it does break to the downside. This divergence target has already been hit, and that was based on this divergence back here, almost a double top on the CCI versus higher highs in the price. It broke down, hit our 23-38% target range in that range. But since then, the price is consolidating, as I said, and the CCI keeps dropping. So again, just cautionary moves. I wouldn't be going long yet until it broke above that resistance area. That was gold. And for silver, if we look onto the market, you can see here again we've got another bearish divergence versus high highs on the price. Now I've drawn a target range there, and if it comes back, we expect it to hit this divergence target range at 23.38%, and that also coincides with these moving averages. So at the moment the CCI is somewhat weakening, it's fallen below the moving averages, and the price is still above, but again I'd expect that to drop slightly as well. So be wary of this. I mean, you go long on the smaller time frames if you're trading on the 1 hour, for example. You want to wait for the daily CCI on the price and the CCI to break above the moving averages. Now the price is, but the CCI is below the moving averages. So don't go long or short until that you see that break one way or the other in conjunction with the price. Also notice back here we had a fair value gap that was filled about 25% of that range, but we've still got this other area to be considered. So that area down here hasn't been touched yet. All these other areas have. So next we're going to look at the Euro US. So for the Euro US, again, we've got this bearish divergence versus high highs on the price, and I've drawn a target range there. It's pulled back below our moving averages. Notice the moving average band is starting to bend to the downside. The CCI is still dropping, still bearish. So more on the bearish side for the Euro US. If you're trading on the 1 hour time period, you'll be going short at the moment. As soon as that breaks below the moving average band, in conjunction with the CCI, you take short positions. Now, at the moment, that's our target range. So at the very minimum, we're looking around about the 114.30 level to hit as a minimum, if it does go to that direction in conjunction where it is at the moment. Next, we look at the US Japanese yen. And eventually, when it does draw, so the US dollar and the Japanese yen, it's bounced off this support at 139.886, and at the moment it's still bullish. Both the CCI and the price are above the moving averages. So at the moment, taking long trades if you're trading on the 1 hour time periods, for example. So that's looking good. There's no divergence to consider or to worry about. That CCI is moving in line with the price. And what you look for is basically those highs on the CCI are higher than those previous highs, and so are the prices. So there's no divergence there. And let's just have a quick look there. There's nothing really to be worried about on this one. Next, we'll look at US crude oil. Now, US crude is currently in this consolidation period. The CCI is flattening out and in that very narrow range, and so is the price. So avoid going long or short until we see it break to the downside below these moving averages to go short, or break convincingly to the upside on both the price and the CCI to go long. So just stand clear on this one until it decides what it wants to do. What you want to see is a bit of a pattern like this with the moving averages turning up along with the CCI. And that would have been an ideal place to go long during that period when both are in alignment if you're trading on the 1 hour period. Now notice back here we had a fair value gap. That's already been filled with these candles. So that's completed. And we've got more recently, we've had another one up here. It's been touched on, about 25% of it's filled here, but I'd say it's probably going to go further to the upside on this one. And then down here we've got another small fair value gap, which again will come back towards this support level at 55.20. But at the moment, stand clear until we see a decision in terms of where the CCI and the price decide to move. Okay, next we look at natural gas, first on the daily. So at the moment, you can see here it's currently broken below the moving averages, so you'd be going short when that CCI breaks below the moving average band. Now you'll notice the price is already bearish, so you go short in that position. But I'm going to demonstrate now the back test, or before we go leave the daily chart. Notice up here we've got a fair value gap. So the price may at some point break higher to that point. We did have a fair value gap back down here before our last video, and those candles there broke through that range quite easily and bounced off that support. So that fair value gap has been filled, but this one up there remains yet to be filled. So it doesn't mean it's going to happen tomorrow. We look primarily at the moving averages to determine the trend. That just gives you an indication of where the price will eventually go at some point. So at the moment, predominantly bearish momentum. But if you wanted to take advantage of the long trades back here, for example, let's demonstrate the long positions. We'll make this a 1 hour time period. So back here, that equates to this area back here. And what you do is you take a long position once the CCI is above the moving averages, and so is the price. And that would have happened in one of those candles back there. And you would have taken long positions from around that point on the 1 hour time period. This is the 1 hour chart. And then you take the strategies. Now, one strategy which we've used throughout the whole period has been when the CCI breaks into the moving average. So you close out the trade at that point there, which gives you an early exit. But the other strategies I'm demonstrating as well today, this is the CCI14 strategy. So you go long when the CCI breaks above the zero. So around here, you would have gone long when that CCI14 broke above the zero. Now this one doesn't start until that point there. You can see that it broke above there. And you close it out when you get a 0.3% gain. So you've had a couple of gains there, a couple of entries, open and close over the entries. And this one generated $1,100 up until today. And you're not in a trade at the moment. You wait for that to break above the CCI14. Again, only when the daily, remember always when on the daily and the hourly are in alignment in terms of moving to the upside. So at the moment, you'll notice there that on the hourly, it's in a bearish momentum, so taking short trades only. So again, demonstrating only for long trades here. This is the CCI 350. Same principle. When the CCI 350 breaks above the weighted moving average 100. Again, the strategies for these are in the description below if you want to get a more deeper dive into them. You go long there. You can see it entered a trade there. Now this one, you close out the trade once that CCI breaks below the moving average. So in other words, you stay in the one trade and you close it out when it breaks below. So you would have closed it out there. That's what it's done. So you can see there the price went against you. You would have closed it out there with on that candle there actually. Yeah, we closed it out first. So I zoom in. You closed it out there when it just dipped below on that red candle. And that would have closed it out up there with a profit of about 4,780. It's currently showing 14.10, but that's because had you not closed it out, you would have lost that gain. Next, we look at the US dollar. Now, the US dollar has been declining, but notice we had this bullish divergence, and that finally played out. The higher lows on the CCI versus lower lows on the price, and that actually bounced, hit our 23-38% minimum target range. And that minimum target was drawn from that low. We take it back to the previous high before that divergence started. Would have been that significant high there, and that's at 23-38% level. Now, of course, it can go a lot higher. It doesn't mean it's going to stop there, but at the very least, more than 90% of the time, it hits these targets. Now, in this case, it could just drop further to the downside, but at the moment, you'll notice the CCI is rising, so that's a positive. So currently on the daily, we're in a bullish momentum, although just be careful, that CCI is coming close to that moving average again. Now, if you're going long at this point, we also look at the 1 hour time period to see if there's any divergence or any sort of things to be aware of. Now you'll notice here, if we look closely, we've got this bearish divergence. We take it to the same points on the price, lower highs on the CCI versus higher highs on the price, and we take it back to the significant low. Now, you've got a lot of spikes here in terms of lows. You could take it back there, but you can see it's already hit the 50% mark. So I'm going to bring it back to that significant low there, and it's already hit that 23-38% range. So it's already hit that range, currently midway through that 23-38%, bounced, and it looks like it's pulling back to the downside again. So just be cautious about going long on this one. So this is the hourly chart for the US dollar. Now if you go to the back tests, again I've started it going back to let's go back to that chart for a moment. I've started back here. Let's go back to the daily for a moment. So what we do is you look at the daily first. Let's get rid of that Fibonacci. So I've started back here when the CCI is bullish above the moving average and the price breaks above as well on that one there. So around about the 11th of July. So around that period, 11th of July. So go to the hourly. You zoom into about the 11th of July. So around this area here. So what we do is we mark it here. You would have gone long on that candle. Start going long at that point, based on the daily and the 1 hour in alignment, going long, bullish. So if we go back to the back test, I've started back here a bit early, but it doesn't matter. You can see that you would have gone long on that one using the CCI14 strategy. And this, it closes out when a 3% gain is made. So you can see there it's made a few little gains there, a few little trades. Even back there, it's now entered another one. But again, remember, the rule is you don't trade against the larger time frame trend. So you always jump back to the daily and the hourly. If they're not bullish, you don't take the trades. This backtest is showing all trades through that whole period. On the CCI350 strategy, again, going long when the CCI has a fresh breakout above the moving average. Don't be tempted to go long when it's already broken above, like going back here, because you might have bought at the peak of the price. So you want to make sure you have a fresh breakout, gives you a better opportunity or better probability of success. That's why it's going long at that point. But ultimately, it would have closed out once that CCI broke below the moving average. So at this point, it would have made approximately, if we close it out there, would have made approximately $2,700 on this one, if you let it run through that whole period. And this one would have generated, if you notice here as well, on the 1 hour, you had a bearish divergence. Go back to the chart for a moment, to the 1 hour chart. So that was the equivalent of this area back here. So as soon as you start seeing lower highs on the CCI versus higher highs in the price during that period, you would have ideally gotten out of the trade on the even on the back test. Doesn't matter what back test or what trade strategy you're using, get out of the trade as soon as you start seeing a bearish divergence. And that's the reason primarily we look out for divergence. We don't necessarily trade them. And lastly, for Bitcoin, currently it's hit this resistance up here at 123.225. This is the daily, and currently it's pulling back. Now here we've got a couple of ranges to look out for. In fact, we've got a few. We've got this, the red one is this fair value gap, and that's for orders unfilled in that range there. And that's identified by the red rectangle, and it's currently not in that range, so it's just hovering, consolidating at the moment. Notice the bearish move of the CCI. A lot stronger than the sideways move of the price, and this blue rectangle is basically the divergence target, the bearish divergence of this wider bearish move, lower highs on the CCI versus higher highs in the price, and that would have been drawn, if I draw it again, to that low there. That's at 23.38% range. That's a blue rectangle. So that's the minimum range we can expect the price to get to, which coincidentally also aligns with this fair value gap. So if it breaks through that fair value gap, it's already then going to hit this divergence target. Now, if it breaks below that, that's where we've got these next levels of fair value gaps identified. It may well come down to this level here. Again, notice if I was to draw this price reduction down to about that level, it's about anywhere from a 20 to about a 20 to 30% decline in price. So just be cautious about that. I'd like to see this, again, you would have taken long positions when the price and the CCI were moving in conjunction on the daily. Now, if we zoom into the 1 hour time period before we go to the back test, again, just be mindful, we don't take long trades at the moment because the daily's in the bearish momentum with the CCI below the moving average. So let's look at the 1 hour time period. Again, notice here, the price is moving sideways, but the CCI is still falling. Just quickly go back to the daily just to identify where you would have started going long potentially to demonstrate the long position. So looking here, for example, when the CCI breaks above the moving averages at the 9th of July, so it would have been on that candle, and the 9th of July on the 1 hour time period is back here, somewhere in that range. So let's draw a little, so around this area somewhere, one of these where the CCI broke above. And in this case, it was consolidating pretty much sideways on the CCI until it finally broke higher. So somewhere in that range, you would have started taking long trades. And again, following a few different strategies, but following the trades on the 1 hour. Notice here as well, with the 1 hour divergence principle, you've got lower highs on the CCI there. The same period, you've got higher highs in the price. In fact, that would have gone back to that level. And from there, it started pulling back. Now, if you start seeing that lower highs on the CCI, even that was moving in alignment. And the first sign of a divergence would have been that level there. That high was higher, whereas the same period down to there, that high was lower. So that was your first sign of a bearish divergence. Up until then, the CCI and the price are moving in alignment. So as soon as you start seeing a bearish divergence, and if you're in profit, especially during this period, I would take your money off the table and get out of and stop trading long in this example. Now going to the back test, This is the CCI14 strategy. Again, here's that arrow I've drawn on the other chart. So you would have started taking long trades from. Now again, notice also on this is the 1 hour chart, of course, which we demonstrated on the previous one. You had a couple of bearish divergence, and you probably would have taken your profits off the table at that point and stopped taking trades. Because since then we've had a bearish move on the price. That's a CCI14. Likewise, a CCI350. You could have waited for that to break to the downside below the moving average, and that would have been also coincided with this bearish divergence. That was giving you an early warning to get out of the trade. So you would have got out there somewhere. So again, don't get greedy. Yes, the price did go higher, but always pay attention to these divergences going against you. So get a better understanding and deeper insights into some of the trading strategies like the CCI14 or the CCI350 strategies that we've demonstrated today. Reference the links in the description below, and they're part of the +1 videos we put out recently and frequently. Thanks, and see you in the next video.